Today in the grain market, corn was steady. The futures are up 25% since December. The option volatility for this time of year is the highest that it's been since 2011 at 33%. That's a pretty big jump that we haven't seen in quite a while. Demand for calls is raising premiums for the out-of-the-money strikes as the March risk reversal has calls at 6% over the puts. That indicates really that the market is sentiment is really to the upside, and the option open interest also is up 40% with a total of 400,000 contracts in just the March contract and 150 plus contracts open interest in the December contract, which is the new crop contract. That's something to be watching, because that just means there's going to be a lot more trade action. That certainly is a recipe for plenty of price action going forward. The fundamentals do bear it out as well. As the futures then push through that $5 mark, there has been a little bit of profit taking. That's why today the market was a little bit steady. But the consolidative trade still has the sentiments towards the upside going into the holiday weekend. Now, soybeans were a little lower. Profit taking did slow the uptrend somewhat, but China continues to buy beans, certainly much more than the USDA even thought. Brazil and Argentina farmers aren't selling anything as of yet, and that's really pushing our market a little bit higher. The U.S. has been more competitive around the world, and certainly that gives us a little bit of a leg up. Option trade is also on the rise, with implied volatility up 2%, up to 27.5, something we haven't really seen in a while for soybeans. The at-the-money reversal is up 6 cents, and even for in the November contract, which would be the new crop, that at-the-money straddle was up 11 cents. That just tells you there's a lot more activity and really more participation in the market. The wheat was easier. The early surge did spark some selling, and futures did get to that $6.93 mark. So we were trying to get the $7 today. It just wasn't to be, but it looks like still there is some upward momentum. We did have a 30-cent range today in wheat. That's because Russia did increase its export tax from 30 to 60 cents. Also, the U.S. national debt is up at $30 trillion. That's somewhere down the line. That's going to have an impact really on all the markets going forward. So today the futures did take a little bit of a breather before the holiday, and it still remains very positive. And I know that we have some overbought conditions right now, so we have to be careful to watch out for a correction. But right now we just have a relatively steady market and more consolidative today.